We're going to look at some stocks on the move. Let's start with the Nasdaq popping after earnings, looking at shares up over 6.5%. Josh, you're really bullish on this one.
Yeah, so this is a breakout that we called in real time here on the show. It had been setting up for a few weeks, and finally on the earnings this morning, the stock just burst through. If we could get a chart that's, let's say, 1 year or 3 year, just so I can kind of illustrate the point here. This setup is, all right, so that's intraday. Let's go next. So this setup, thank you. This setup is textbook. The stock had been consolidating for a long time. The next level of resistance is about 68.70. It's 6% below its all-time highs. This is one of those names that had not yet eclipsed the November 2021 high. There's a crowd of gentlemen behind me, very handsome.
Some ladies there, too.
Some ladies as well, and they're here for something called the Concentra IPO. It's healthcare. I don't really know what that is, but they're going to raise at a $3 billion valuation. Later in the show, we're talking about Lineage. It'll be the biggest IPO of the year. That one's on the Nasdaq, not here. That's cold storage for like grocery shipping. A REIT, believe it or not. That's going to be a massive IPO. $19 billion valuation is what the talk is. Nasdaq is going to be the biggest publicly traded beneficiary of the return of the IPO. Frank, did you know there are 1,200 venture capital-backed private companies worth $1 billion or more?
Unicorns.
Unicorns, 1,200! We haven't had exits for these companies in 3 years. So when they go public, Nasdaq rocks and rolls each time we see those. So this is the setup. Technically, fundamentally, I listened to the call this morning. They're firing on all cylinders on the index business, the data business, the fintech business. So I love when you have a fundamental story blossoming right as price action confirms it, and that's exactly what we have here with NDAQ. I'm not taking the profit. I'm staying long the name.
You know, stock moving higher while we're talking about it. Give us that stat one more time. You're staying on brand with NBC. The more you know. How many companies?
1,200 pre-IPO startups worth $1 billion or more. That's a lot of underwriting fees.
All right, we give the fans what they want. Maybe even like a largely Josh Brown block. Shares of Warner Brothers Discovery. They're lower today on news. Their plans to sue the NBA over its bid for broadcast rights. Josh, you own this one. Your take on this whole, I'm going to call it a kerfuffle. David Zaslav about a year and a half ago said we don't need the NBA, and now they don't have the NBA.
I have no comment, Frank. No, I'm kidding. So I have a very small position here. I own it around these prices. The idea behind this was it can't get worse. Got a little bit worse. I didn't think they would be able to outbid Amazon. I don't think anyone on Wall Street did, which is why the negative reaction today is so muted. If people really thought that they were going to bid $1.8 billion and launch a whole new streaming platform just for the NBA, this name would be down like 15 or 20%. We all know that that part of the business is going away. They have one more season left. If you own this name now, it's because you think the studio has a lot more value than what's currently reflected in the stock, and you think they'll be able to take down some of the debt on the balance sheet, which is really what's plaguing this share price. So that's what I think might happen. It's not going to be overnight.
All right, WBD shares down more than 5%. We want to go through some of today's other big movers. Honeywell shares, they're lower. That's despite an earnings beat. Brenda, coming over to you.
Sure. So this, Honeywell saw all four divisions of the business grow sequentially year over year. The aerospace technologies was really phenomenal, grew 16%. So there are reasons to be excited. However, it was the forward guidance that showed that profitability wasn't going to be quite as high as expected next quarter. But I don't think that's a reason to take away from the bigger picture story here, and that is that all four divisions are growing again sequentially, and I think that's it's creating more of what I think is a buying opportunity than anything else, and great to see that the aerospace technology business is doing so well.
So you see it as a buy. Not only did they lower their EPS guidance mid-range about 3% below the estimate, but they also lowered their margin guidance, which I thought was interesting. This is a company that's been really touting its AI capabilities. Isn't AI supposed to be about margin expansion?
Margin expansion. This is a company that's also been very acquisitive, so I think there are, some margin drags from some acquisitions that have been a little bit dilutive. But again, I don't think it takes away from the bigger picture story here that I think is still positive. But yes, disappointing to see that the profitability guidance wasn't what we wanted it to be for next quarter.
All right. Shares of Honeywell down more than 4%. Abbvie, however, hitting a new record high on earnings. Taking a look at that stock. Bill, over to you.
Yeah, the question over the last couple of years was what type of transition are they going to make when Humira is unlocked? And although the Humira sales are down 30%, they were a little more upbeat on forecasts. But Skyrizi and Rinvoq, Skyrizi 45% year over year, Rinvoq up 56% year over year on sales. So they're showing this the direction that they've moved. They've been able to replace that revenue. New highs, I mean, typically lead to new highs. I love what we're seeing from Abbvie here today.
All right, Abbvie up over 3.5%.